Hi, I'm Anthony from Red Star Insurance Brokers. I've been getting a lot of calls lately from growers inquiring about Multi Peril Crop Insurance. So today I thought I'd put together a video to provide some information on what's out there, how it works, and an idea of what it costs. I've looked at many multi-peril models over the last 5 years, and to be honest, I've been a little sceptical of some in terms of how they work, who's behind them, and whether or not they are in fact sustainable in the long term. Having said that, in the last couple of years, I've referred a number of clients through to Sure Season, and after going through the claims process, I'm now confident in recommending their product to my clients. So today I'm going to run through their product so that you can understand how it works. Let's start with what they cover. A traditional hail and fire policy is limited to just those two perils. The Sure Season multi-peril policy covers the hail and fire as well as a range of other perils such as drought, frost, flood, insect and pest infestation, to name just a few. The Sure Season product essentially protects you for a percentage of your average revenue. So let's say the farmer's 5-year average revenue is $1 million for round figures. In this example, he decides to insure 55% of his average revenue, or $550,000. If the farmer suffers a loss in revenue due to one of the perils noted earlier, such as frost or drought, which causes his revenue to fall below that 550 level, let's say in this example to say $350,000, the Sure Season policy makes up the difference between the $550,000 and the $350,000 that he's actually received. So this is obviously $200K in this example. Now the farmer might say, right, even in a really bad year, I know I can still get $100K in revenue, whether he cuts a failed crop for hay or puts his sheep on it. So he might decide to retain the risk on that bottom 10% of revenue and not insure it. This will save him a little on his premium as the insurer is not taking on quite as much risk. In this example, the policy starts paying when his revenue falls below $550,000 and stops paying if his revenue falls below the $100,000 mark. In order to obtain a quote, Sure Season required details of your past 5 years cropping history. This is essentially the total hectares planted for each crop type and the total tonnage harvested in each of the last 5 years. They then use this annual average yield to generate an estimated revenue for the coming year. When calculating the expected revenue, the commodity price for each crop is set by an independent Australian crop price forecaster based on forward price estimates. The price is set in either January or February and is calculated by taking the average of the 4 quarterly forward estimates. Sure Season charge a once-off application fee of $4,000 to review your cropping history and provide a quote. As I said, this is a once-off payment, and once you've paid this, you're able to get a quote every year going forward without paying this again, whether or not you take out a policy. Farmers with a turnover of less than $2 million can apply to claim $2,000 of this back from the federal government under the Managing Farm Risk Scheme. One of the key conditions of the Sure Season policy is that there must be germination of the crop in order for the cover to be provided. So if you dry sow and there's no germination, the paddocks that don't germinate are removed from the policy and the premium for those paddocks is refunded. According to Sure Season, all insured paddocks must contain a commercially emerged viable crop. If you're interested in obtaining a quote, my advice is to get your application in prior to the 22nd of September. And the reason for this is that applications received prior to this date are not only guaranteed to get a quote, but also the quote is not subject to what is known as climate underwriting. Basically what this means is if you apply for a quote in the new year and it hasn't rained for months on end, they may not offer you a quote, or the quote they offer you may be at a higher price or a lower level of cover. For existing Sure Season customers, however, you've got up until January 23 the following year to decide whether you wish to renew or not without that climate underwriting process applying. Sure Season was established by Brendan Reinheimer and Daryl McRae, who are based in Horsham in Victoria. They started work on their product in 2008, and after many years of refining it, they took their product to market in 2016. They're backed by Lloyd's of London, which is the most secure insurance market in the world. Sure Season are the leaders in the multi-peril space, and in the last couple of years have insured more farmers than all the other multi-peril products combined. Now to the question of cost. That's what everyone wants to know. This obviously varies between areas and depends on what percentage of your revenue you wish to cover. In our experience, for a grower that wants to insure, say, 50% of their revenue and retain the bottom 20% of risk, it costs around $15 a hectare. Increase this to, say, 55%, costs around $20 a hectare. Increasing the percentage to 60% or higher starts to get quite pricey, and that 55% mark is the sweet spot for most growers. To sum up, I've looked at a lot of different multi-peril products in the last 5 years, and in my mind the Sure Season product is the best option available. I like it because the policy wording's straightforward, they're backed by Lloyd's of London, and just as importantly, I've met with the owners and am comfortable with not only them, but also their claims process. As I said, the key date is the 23rd of September. If you'd like to get a quote, give me a call well before that so you can get your forms filled in. Thank you for your time, and if you'd like to know more about multi-peril, feel free to give me a call.